Good afternoon and welcome to BizTech Asian Midday Market Watch. It's the 7th of August. I am Samantha Voon, and here my co-host with me is Brian Fernandez. So let's start by taking a look at the summary of market actions. Over in Japan, Asian stocks saw a rebound today after earlier losses in the week, with Japan leading the recovery. So this happened after the BOJ's Deputy Governor Shinichi Uchida indicated that the central bank would hold off on interest rate hike during this market instability. The Nikkei 225 index surged over 3%, reversing their earlier declines to its 8 months low. Consequently, Japanese yen weakened against the dollar, and this has benefited local stocks. Focus will be on key Japanese earnings today, with SoftBank Group and Honda set to report later in the day. Following Japan's lead, South Korea's Kospi rose around 2.5%, continuing its recovery from near 9 months low and reflecting an improved investors' outlook. Brian, over to you.
I'll start with Australia. The ASX 200 saw a modest increase of 0.2%, influenced by the regional upward trend and positive signals from Wall Street. Over in India, Indian markets showed signs of a positive trend as well, with futures for the Nifty 500 index pointing to gains. This comes after its strong recovery yesterday that initially lost steam. Over in Hong Kong, the Hang Seng index increased over 1% despite volatile trading. Gains in major technology stocks balanced out weaknesses in other sectors, leading to positive overall sentiment. Now, over in China, mainland Chinese stocks still lag behind, with the Shanghai Composite Index remaining flat to slightly negative. Concerns about China's economic recovery has persisted, and investors are closely watching for upcoming trade and inflation data for more insights into the economic outlook. And that's it for today's market updates. Now, to give us insights into markets, we have our guest today, Phan Vee Leung, founder and CIO of Track Record Asia. Vee, welcome to the show.
Hi, it's good to be here. Let's talk about markets.
Now, we've had a roller coaster week, Vee, so far. Give us your sense of your view on the market direction right now.
Well, as you know, we started a week with a panic sell-off in mainly the Nikkei, and that led to risk aversion across the board. Everything was selling off. Cryptos was selling off. U.S. stock futures, you name it, it was going down, right? And it seemed like almost a crisis, but we are now on Wednesday, and that seems to have reversed completely. I think it is pretty much a storm in the teacup. The sell-off was triggered by a number of factors, but mainly it most affected the Japanese market because the Bank of Japan hiked rates last week, and last Friday we saw a weaker than expected non-farm payrolls and unemployment data from the US. So that increased risk of fears of a recession already happening in the US. And also over the weekend we had Iran threatening to retaliate against Israel for the assassination of Hamas leaders. So it's a confluence of all these factors leading to the perfect storm in Japan. Strengthening yen led to unwinding of carry trades, which is a carry trade is traders taking on borrowing yen, which previously was zero interest rates, to buy risk assets, and that a strengthening yen, a lower stock markets, all triggered liquidations and selling into weakness. But I think that's pretty much.
I want to stop you here, Vee. That carry trade issue, that's not gone away, hasn't it? Because there's a lot of liquidity to be potentially brought back to Japan in the event of rising interest rates in Japan, which will then have a cascading effect across the world.
Yes, correct. But that, I guess, the Bank of Japan kind of panicked and reacted to this, as Samantha mentioned earlier, the deputy governor this morning said that they will not raise interest rates if the markets are unstable. And I think that's exactly what it means. The instability means that Nikkei is falling more than 10% a day, and yen is strengthening by 5%. They are panicking on that. They are taking back their aggressiveness in the comments last week, where they said that they are poised to hike further going forward. But I think this is them basically giving in to the market, saying that they will not hike if the markets are unstable. Uh, I think this also shows that the markets are quite weak to the downside, given that, as you said, there's a lot of strategic trades through the years which have benefited from low funding costs in the yen. But for now, of course, we have seen the weak hands liquidating, but those who have not yet liquidated will be liquidating as it recovers as well. They did not panic; they are liquidating. So I think we have seen the top for now, and for the Nikkei, and that makes sense as well, because interest rates are rising over there, and the yen is strengthening. So all the factors that are leading to this relentless rise in Nikkei for the past year is reversing and will continue to reverse. Although the pace may not be as fast as feared, but I think it is almost eventual going forward that if the market stabilizes, then they will hike, right? So you are in the catch 22 situation where there's really no reason for it to go further up besides short-term trading, but overall, as mentioned in our track record risk reports, is that this is just a short-term volatility triggered by uh, liquidations. When liquidations stop and the dust settles, and it has kind of settled so far, the global macro picture environment continues to re-exert, which is that the U.S. Federal Reserve has pretty much said that they will cut interest rates in September. The markets are pricing for almost a 50 basis points cut in September now, given the weakness of the non-farm payrolls and the higher than expected unemployment rate. So I think we are pretty much set to see lower interest rates going forward in the US. And it has been the case for most of my career that actually all of my career, that when the Fed cut interest rates, they tend to cut too late. But when they tend to cut faster than expected and more than expected. And I think we've reached a point where it is quite clear now that the problem with the US economy, the biggest worry for the US economy is not inflation anymore, but it is the slowing of the jobs market and the slowing of the economy. I think fighting inflation right now is fighting the enemy in the rear view mirror. Inflation, when it rose, it spiraled higher faster than expected, because inflation is a phenomenon like this. Higher inflation leads to higher expectations of inflation, and that spirals higher very quickly. And now we are seeing lower inflation and lower expectations of inflation going forward. And I think that is the trend going forward, is that the risk assets, meaning stocks and any other assets that require some risk appetite, will start to do better going forward as well.
So it's also a roller coaster ride in the crypto space right now, with Bitcoin's volatility at its 20 months high, and traders are hedging against further slumps. Can you tell us a bit of what's happening in the crypto space?
Well, I think it's pretty much liquidation of risk assets. I think Bitcoin has been quite volatile in the past month, where we saw it going down aggressively on fears that Mt. Gox creditors will be selling a lot of Bitcoin, and also the German government was unloading their Bitcoin holdings, and then it started rallying because U.S. presidential candidates all started to seem very open to embracing cryptos. Donald Trump, for one, says that he will never sell any crypto from the government, any Bitcoin holdings from the government's confiscation of Bitcoins from illegal entities. Going forward, they will just keep building their Bitcoin, and they want to make US the crypto capital of the world. So I think we saw that triggering a rally to close to 70,000, and then yesterday it dropped below 50,000. It's a big roller coaster. Yes, as you said, the volatility is high for a reason as well. The US stock market's volatility, and in Japan as well, it spiked to multi-year highs. Japan's drop on Monday, Nikkei's drop on Monday is the biggest drop since the 1987 Black Monday. We are all very young here, so maybe we didn't see that, but it was a harrowing day in 1987. And VIX, a measure of US stock volatility, spiked from low 23s to 65, and that's not seen since the start of the COVID crisis, when, as you remember, the COVID crisis was just a few years ago, and markets were in free fall, economies were closing down, countries were closing down their borders. So it reached the extent of that fear, but it's all in one day. And the VIX now, after reaching 65, is now around 27. So it's pretty much back to where it was on Friday. So I think it is not volatility in the crypto space, but volatility across the board. It's not unexpected, but again, it was led by liquidations in ETH, in crypto, in Bitcoin. Everybody thought it was a free money game when Donald Trump embraced cryptos, and there were rumors that Kamala Harris will also embrace cryptos. But in the longer run, I think it is almost inevitable that the governments across the world will start being more friendly to cryptos if US takes the lead. And I think as we head towards the US presidential elections in November, more of the candidates will start to, primarily Donald Trump and Kamala Harris, will start to cater more to the crypto space, crypto sector, because of possible donations from the crypto billionaires and other tech companies, right? So what do I see? I think in the short term, we have seen the liquidations done. Bitcoin now, I think it's trading around 57,000. Yesterday, it looked like it was going to end when it went below 50,000 briefly for a few times. But my constant view has been, you shouldn't, generally the audience that's watching the show shouldn't be worrying about short-term volatility in the crypto space, but just continue to buy Bitcoin on dips for the eventual trend where more and more mainstream investors start to get invested in Bitcoin and Ether. So BlackRock today, there's a piece of news where BlackRock today filed for options on their Ether ETFs. So I think that's just a trend, right? There's going to be more and more products that revolves around getting mainstream investors to be invested in the cryptos.
Yep. It's really exciting times looking at the roller coaster up and down like this. So thank you so much, Vee, for coming on the show today.
Thank you.
So we've been speaking to Phan Vee Leung, founder and CIO of Track Record Asia. And this has been BizTech Asian Midday Market Watch. I'm Samantha Voon.
And I'm Brian Fernandez.
And be sure to keep informed on the latest market updates weekdays at 1 p.m. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.